Gold just hit $5,000 an ounce. $5,000. And if you're watching the mainstream financial media right now, they're telling you the exact same thing they always tell you. They're saying it's a bubble. They're saying it's irrational exuberance. They're saying smart investors are taking profits and getting out. Let me be crystal clear with you. They are lying. This is not a bubble. This is not a top. This is a funeral. The dollar you've been working for your entire life, the dollar your parents told you to save, the dollar the government promised would hold its value, that dollar is dead. And what you're seeing right now is not gold going up, it's the dollar going down. It's collapsing in real time. And if you don't understand the difference between those two things, you're about to lose everything you've worked for. Before we go any further, I need you to do something for me. If you want analysis that cuts through the lies, that isn't paid for by Wall Street banks or government propaganda, hit that like button right now. It tells YouTube that real information matters. And if you want to see the moves before they happen, before the mainstream catches on and it's too late, subscribe to OG John XX right now. This channel isn't here to make you feel comfortable. It's here to show you the truth before the house burns down around you. Now, if this is your first time here, you're probably thinking I'm being dramatic. You're probably thinking this is just clickbait. Good. You should be skeptical. Blind trust is how people go broke. I don't want you to just believe what I'm saying. I want you to go verify it yourself. The system, the banks, the talking heads on television, they make money when you stay confused. They profit when you don't ask questions. They need you to think this is all normal market behavior. It's not normal. So don't take my word for it. Go look at the M2 money supply charts yourself. Go read the Federal Reserve balance sheet. Look up the Treasury auction results from the last 6 months. The people who actually do the research, who take the time to look at the real numbers, they all come to the same conclusion. The system is broken. The dam has cracks in it, and those cracks are turning into holes. Let me show you what's happening right now, right this second. In New York, gold is trading at $5,000 an ounce. But look at what's happening in Asia. In Dubai, that same ounce of gold is trading with a $200 premium. In India, it's even higher. You're seeing $300, $400 premiums just to get physical metal. Why does that matter? Because it means the paper price and the physical price are splitting apart. The casino on Wall Street, where they trade digital contracts and settle in cash, that's one reality. But the real world, where people are buying actual metal you can hold in your hand, that's a completely different reality. And the gap between those two realities is growing every single day. This isn't about gold being valuable. Gold hasn't changed. It's the same metal it was 100 years ago. What's changed is trust. The world is losing faith in the dollar, and when confidence dies, it dies fast. Think about it like this. If you're in a crowded theater and someone whispers that there might be smoke, nothing happens. People stay calm. But the second someone yells fire, everyone runs for the exit at the same time. We're at the point where people are starting to smell smoke, and the people in charge are standing at the front of the theater telling you everything is fine. Stay in your seats, don't panic. But look at what they're doing with their own money. They're running for the door. This is more dangerous than the dot-com crash. It's more dangerous than 2008. Those were asset bubbles. This is a currency crisis. And history shows us exactly what happens when currencies fail. There's a book you need to read. It's called When Money Dies by Adam Ferguson. It documents what happened in Germany after World War I. The Weimar Republic printed money to pay their debts. At first it was fine. Prices went up a little. People complained, but they adjusted. Then it accelerated. Then it went exponential. People who saved their entire lives in German marks watched their savings become worthless. A lifetime of work couldn't buy a week's worth of food. But the people who owned physical assets, gold, silver, land, they survived. They made it through. The majority always learns this lesson too late. They wait until the crisis is obvious to everyone before they take action. By then, it's too late. The price has already moved. The door is already jammed with people trying to get out. We've moved past the slow grind higher. We're entering the parabolic phase. And this isn't some accident. This is the bill for 50 years of financial fraud. Since 1971, when Nixon took us off the gold standard, the world has been running on a system based entirely on debt. We print dollars to buy things we can't afford. We create money out of nothing and expect the world to accept it as payment. You can't solve a debt problem by creating more debt. That's like trying to cure a hangover by drinking more alcohol. It doesn't work. It just makes the eventual crash worse. The world was supposed to keep accepting our dollars forever. That was the deal. We print paper, they send us real goods. Oil, cars, electronics, everything. They were supposed to take our IOUs and smile and say thank you. But the world is waking up. They're realizing the dollars they're holding are losing value every single day. Look at what's happening with central banks. This is the smoking gun that nobody is talking about. Central banks around the world are dumping US Treasury bonds. They're selling dollars. And they're buying gold at a pace we haven't seen in 50 years. These aren't retail investors. These aren't Reddit traders making emotional decisions. These are the most sophisticated financial institutions on the planet. They have access to data you and I will never see. They have economists, analysts, historians, and they're all coming to the same conclusion. Get out of dollars. Get into hard assets. Now. But here's where it gets really interesting. The gold to platinum ratio is completely out of whack. Right now, platinum is trading at $1,100 an ounce. Gold is at $5,000. That's a ratio of 4.5 to 1. Historically, platinum has always been more expensive than gold. Always. It's rarer. It's harder to mine. It's used in catalytic converters, in hydrogen fuel cells, in medical equipment. But right now, the market is treating platinum like it's garbage. This is a distortion, and distortion's always correct. Either gold crashes back down, which seems unlikely given that central banks are buying, or platinum explodes higher to catch up. We've seen this pattern before. Analysts called for $2,000 gold back in 2019. Everyone laughed. It hit. They called for $3,000. People said it was impossible. It hit. Now the forecast is $2,500 platinum by the end of next year. That's more than double from here. This isn't guessing. This is math. It's looking at supply and demand and realizing the numbers don't add up. The equation is broken. But here's the real opportunity that almost nobody is talking about. The smart money, the hedge funds, the big institutional players, they're positioned completely wrong. The Commitment of Traders report shows that large speculators have almost no long positions in platinum right now. They're sitting on the sidelines. In fact, they're positioned exactly like they were in March 2020, right before platinum had its biggest rally in a decade. When everyone is on one side of the boat tips. Right now, everyone is betting against industrial metals. That's exactly when you want to be on the other side. Meanwhile, the physical supply is disappearing. You can manipulate the paper price on the futures exchange all day long, but you can't print physical metal. South African platinum production, which accounts for 70% of global supply, has dropped 30% in the last 3 years. Mines are closing, costs are rising, and the remaining supply is being bought up by industrial users who actually need the metal. China is stockpiling. They know they need platinum for their green energy transition, for hydrogen vehicles, for industrial catalysts. The European Union just classified platinum as a critical strategic mineral. That means governments are now competing with private industry for supply. When governments need something, price becomes irrelevant. They'll pay whatever it costs. We've been in a supply deficit for 3 years straight. We're using more platinum than we're mining. The gap is getting wider, and when this rubber band snaps, the move won't be gradual. It'll be violent. Here's what makes this even scarier. Normally, when the price of a commodity goes up, producers make more of it. Basic economics. Supply responds to demand. But platinum doesn't work that way. You can't just open a new platinum mine. It takes a decade and billions of dollars. The existing mines are already running at capacity. So even if platinum goes to $5,000 an ounce, the supply won't increase for years. It's inelastic. It's stuck. This brings us to the bigger picture. We're watching the end game of a monetary system that was always going to fail. Since 1971, every president, every Congress, left or right, doesn't matter. They've all spent more than we earn. They discovered they could just print money to cover the difference. They call it modern monetary theory. They call it quantitative easing. They use fancy words to hide what it really is. It's counterfeiting. It's theft. They print the money. You pay the inflation. It's a wealth transfer from you to them. They get the new money first, when it still has value. By the time it gets to you, it's already lost half its purchasing power. Now let me tell you why most people can't see this. There's a psychological barrier that's been built into the system on purpose. Think of gold and platinum like a door with a giant warning sign on it. Danger, high volatility, not suitable for retail investors. The system put that sign there. They make it hard to buy physical metal. They add taxes and premiums that don't exist for stocks. They allow paper market manipulation to create artificial volatility that scares you out. They create social stigma. If you bought tech stocks, you were smart. If you bought precious metals, you were a paranoid conspiracy theorist. Your financial advisor probably told you it was a bad idea. Your friends probably made jokes. But let me ask you something. Are they laughing now? In 2025, when gold hit $5,000, did they laugh? No. The laughter stopped. The people who ignored the warning sign and walked through that door are the only ones who still have purchasing power. But holding these positions is painful. You have to watch the price get smashed for no reason. You have to watch the manipulation happen in broad daylight. Right now, we're entering a high-risk window. It's Chinese New Year. The Shanghai Gold Exchange is closed for the holiday. When the biggest physical buyers in the East take a week off, the paper manipulators in the West come out to play. They use these windows to hammer the price down. We've seen this pattern for 15 years. They're trying to shake you out before the buying comes back. But here's the mental shift that changes everything. You need to flip the chart upside down in your mind. The problem isn't that gold is expensive at $5,000. The problem is that the dollar is worthless. The currency is dying. It's not dying in some abstract future. It's dying right now. Every day it loses a little more credibility, a little more trust. Then suddenly, all at once, it loses everything. We're transitioning from the gradual phase to the sudden phase. The people running this system are trapped. Imagine you're in a room with two buttons. Button 1 saves the bond market. It saves the treasury market. It keeps the government funded. Button 2 saves the dollar. It saves the currency's purchasing power. You can only press one button. If you save the bonds, you have to print trillions of dollars, which destroys the currency. If you save the currency, you have to stop printing, which crashes the bond market and bankrupts the government. They've already made their choice. They're smashing button 1. They're going to sacrifice the dollar to keep the government alive. They'll choose the lesser evil for them, which is the greater evil for you. They'll blame it on Putin. They'll blame it on supply chains. They'll blame it on greedy corporations. They'll never admit it's just math. Ray Dalio said it best. When debt gets too high, there are only two ways out. You either default or you print. And no government in history has ever chosen to default when they have a printing press. They always print. They always devalue. So stop listening to what central banks say on television. Watch what they do with their money. The Bank of China is buying gold. The Reserve Bank of India is buying gold. Poland, Hungary, Singapore, they're all loading up. These are the smartest investors in the world. They manage trillions of dollars, and they're dumping paper and buying metal. Meanwhile, retail investors are doing the opposite. Regular people are selling their gold ETFs to buy tech stocks and meme coins. This is a massive divergence. The smart money is exiting. The dumb money is piling in. Old money, the families that have stayed wealthy for generations, they're not trying to get rich. They're trying not to go poor. They know a melting ice cube when they see one. And every fiat currency in history is a melting ice cube. Gold is the freezer. They understand something that most people don't. You don't sell gold to get more dollars. You hold gold so you still have wealth when the dollars burn. But I'm not going to lie to you. There is a bearish case here, and if you ignore it, you're going to get hurt. Gold just went vertical. It shot up $500 in 3 weeks. Markets that go parabolic often crash just as fast when they correct. Platinum is sitting at $1,100, but it's failed to break resistance 3 times this year. Technically, it's in a vulnerable position. We could see a sharp pullback before the next leg up. Just because an analyst has been right in the past doesn't mean they have a crystal ball. Predictions are forecasts. They're educated guesses. Sometimes the forecast is wrong. Just because gold and platinum used to trade at a certain ratio doesn't mean the market has to go back there. Markets are irrational. They're emotional. And right now, they're manipulated. The COMEX is a rigged game. They've defended certain price levels for decades. When demand gets too high, they change the margin requirements. They settle contracts in cash instead of metal. They've done it before. They'll do it again. If you're betting everything on a quick flip, you're playing a game you can't win. But here's where emotion stops mattering. The physical data doesn't care about your feelings. The mining ratio is undeniable. For every ounce of platinum we pull out of the ground, we pull 10 ounces of gold. But platinum is trading at 1/5 the price. That doesn't make sense. The above-ground stockpiles tell the same story. South African inventories are down 60% since 2020. The vaults are emptying. And now the US government has put platinum on the critical minerals list. They need it for defense manufacturing. They need it for green energy. They need it for national security. Do you think the Pentagon cares about the spot price? If the military needs the metal, they take the metal. Economics goes out the window when survival is on the line. China understands this. They're the largest consumer of platinum on Earth, and they're tightening export controls on rare earth processing. If they feel threatened, they'll cut off supply to the West. This is the perfect storm. Supply is collapsing, demand is rising, and the only buyers with deep pockets are governments and central banks. Look at the ETF flows. Retail investors are selling. They're leaving the market, yet the price is holding. How is that possible? Because central banks are buying every ounce that retail dumps. The crowd hasn't arrived yet. The mania hasn't started. We're still in the accumulation phase. The big players are loading up before the music stops. You need to verify this yourself. Don't trust me. Don't trust anyone. Go look at the COT reports yourself. Go check the South African mining output data. Go look at the divergence between ETF outflows and price stability. Look at the leverage ratios in the banking system. The system is sick. The currency is dying. But there's one specific event that almost everyone is ignoring. It's not the debt. It's not the wars. It's a regulatory change coming in the banking sector that's going to force a liquidity crisis. New Basel III regulations are requiring banks to hold more Tier 1 capital, and they're scrambling to find physical assets to meet those requirements. When that deadline hits, the price of gold and platinum won't drift higher. It'll gap up overnight. You need to see exactly when this regulation goes into full effect and how to position yourself before that window slams shut. Click the next video right here to see the exact timeline and what happens when the banks run out of time.